So when the market is dropping like it has been recently, I've noticed there is one common mistake that traders are making, and it's costing them thousands. If you're a trader yourself, you're probably making this exact mistake I'm talking about. So if you want to find out what this mistake is that you're making, that once again is costing you thousands, how to correct it, fix it, and actually turn this weakness into your advantage, so you can actually walk away with profit instead of losing money because of this mistake you're making. Stick around, because in this video I'll be showing you exactly how to trade a falling market with volatility and news catalysts. So if that sounds like something that would be helpful for you, stick around. We're going to get into it. So let's begin with the VIX, guys. We have a very volatile market recently. You've seen the VIX shoot up over 25% in 3 days, okay? And so with volatility comes wild and rapid price swings. Now, these price swings can work to your advantage or your detriment, and that's why I want to show you some of the mistakes you might be making that are actually, bending this volatility to your detriment, okay? You want to use volatility to your advantage, and if you can manage to do that, you will walk away looking like the champion of the markets by the end of tomorrow. Okay, so what is some of the mistakes that you're probably making if you've been trading recently? Mistake number one: so many people, and don't feel bad if this is you, okay? But you might think like, holy shit, that's actually exactly what I said today. A lot of people say this. They say, Alex, what do you think about buying puts today on the S&P 500? Now, the problem with this is not the question of whether you should buy puts. The question is, why didn't you buy puts back here, back here, back here? Why do you want to buy puts down here? You see the problem? Every day you have a down day in the market, the probabilities for an up day rise. It's just like flipping a coin. You can only land heads so many times, right? So let's say a down day in the market is heads, 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 and finally you land at tails, okay? And so markets are not going to go down in a straight line. And so what you really have to do is ask yourself, okay, we're down 200 points in 3 days. Am I taking the highest probability trade, or am I a little late to the party? Wasn't the party beginning over here, 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 right? So you don't want to show up to the party late, because not only are you paying an implied volatility premium, meaning you're paying a lot more for these contracts, you're also getting less meat on the bone, right? The party is almost over, okay? So every time you're thinking about shorting something when it's already dropped, you need to ask yourself those two questions. One, am I showing up to the party late? Okay, and two, am I putting myself in the most advantageous and high probability setup, right? Because once again, let's just say it's a 50-50 coin flip, right? You land heads, heads, heads. Okay, yes, this is a 50% probability to land a heads or a tails again, but the combination of hitting heads 4 times in a row is very unlikely, okay? So once again, when you've hit heads 3 times in a row, ask yourself, am I confident to hit heads the 4th time? Or is this not a coin flip? Do I actually have an edge? Do I actually have a higher probability than just a coin toss of 50-50? So if you can answer these questions confidently and say, you know what, yeah, I might be late to the party, but there is a lot of downside here. I'm still putting myself in a phenomenal position to win. Okay, if the answer is that to these questions, then it's appropriate to still get in on the short. But today and in today's example, this was not the best scenario to get into. On top of that, you saw we actually had increasing pre-market volume to the upside, signaling an up move. And when you break this pre-market resistance level on very strong volume, that's your signal that, yeah, this is definitely not the best time to get in. So what you have to do is pivot and adapt to the market conditions. So getting back to the point that markets are not going to drop in a straight line, and so you shouldn't necessarily be discouraged just because it bounces, right? So if you wanted to short it, don't think that it's going back to the moon necessarily, back up to 4,300 just because it has one update. Okay, because what you should actually realize is that it had a very weak move to the upside today after this initial volume spike here at the beginning of the day. So yes, they do actually buy the dip, but once again, you see we had 2 failed attempts higher at where? Okay, this is not just a double top anywhere. This is a double top at the point of sell-off, okay? So what that's telling you is that price is not yet ready to exceed the point of sell-off here yesterday. Okay, and so another thing, okay, this is thinking from more of a mathematical and logical perspective. Do you see this rate of change here? Now, consider this. Prices fall much faster than they rise typically. That's why you can see a market crash will last, 3 weeks, whereas the time it takes to rise back and up out of that crash can take years. Now, in this case, we saw that happen within less than a year, right? But remember that prices typically fall faster than they rise. So using that logic and using that understanding, you can see, okay, we dropped really fast and we rose just as fast back upwards. Now, once again, using that logic, if we usually drop faster than we recover, but we've already recovered as fast as we've dropped, usually, okay, this recovery is going to need some more time to actually gather the strength and pick itself back up and actually push through there. Okay, so this rate of change for an up move is highly unlikely to sustain its trajectory, whereas a downward move can actually sustain a trajectory of such because of the fact that, once again, prices fall faster than they rise. So considering this, at this point, when you have triple top now, 1, 2, 3 so far, at this level of sell-off, and we know that this rate of change is usually an unsustainable rate, right? Because it's already matched the rate of change of the sell-off. We understand that mathematically speaking, and rate of change terms, that we are less likely to actually break above this level than we are to reverse back lower. Okay, so do you see how common sense and logic actually can help you in the market? I know a lot of people say, but don't you know the market is irrational and it doesn't care what you think. But in this case, okay, we're using rate of change terms to map out facts, okay, that things drop faster than they rise, and if it's risen or rose as fast as it's dropped, usually it's not going to be able to keep up that rate. Does that make sense? So at this point, you are getting a topping formation, and what you're seeing right here is a head and shoulders. Okay, so let's actually draw this out for you. You can see you've got a shoulder here, a head here, which actually goes higher than the shoulder price, and we're forming a shoulder right now, but it is too early to go ahead and give a definitive answer. So what you want to do is keep an eye on the pre-market futures here after hours and see what is the development of this right shoulder looking like. Now, even if it breaks out a little higher, that does not mean that all of a sudden we're going to reverse bullish at this point, okay? You want to keep an eye on the point of sell-off, okay? Because it's highly unlikely that the up move, that the upward trajectory is going to exceed the rate of change of the downward move we just had, okay? So that is not to say that the market cannot break out higher, right? But we are saying, based on rate of change, it is less likely that the market will go higher than continue lower. Okay, so to give you a probability scale here, you're looking at a 70% chance for a reversal to the downside and a 30% chance for a move higher. Now, how do you track and make the pivotal move into calls if it does decide to rip higher? Okay, what you really need to pay attention and keep track of is the volume of this price action. A volume is going to be the confirming factor and signal that you're actually going to break out for the day. Okay, and so remember, obviously you have less chance, a lower probability of breaking out, but it's still a probability of happening nonetheless. Okay, so the confirming factor, once again, is volume. And that's how you would have known today that despite this resistance level, right, you got a bunch of technical analysis junkies out there saying, resistance level, they try to short it and they get crushed. Okay, so key point to make here, when volume is breaking out in a certain direction, oftentimes you need to forget your emotions, forget your feelings, forget your P&L, and get out, okay? Because if you held, let's say you tried shorting it here, and it just rises, and you just held all day today, you're losing money, especially if you're trading weekly options like we specialize in on this channel. Okay, you're getting destroyed by theta. Okay, so not only do you want to cut the loss sooner, you want to go ahead and just forget about the trade and make sure you're ready to get into the next one, because at this point your probabilities are rising that it's actually going to reverse. But if you give up on the trade and if you're emotional after taking a loss here, then you're not going to be shorting it when you actually have the highest probability of winning to the short side, which is up here. Okay, so just understand that losses are a part of the game, but the key is to stay in the game, stay emotionless, so you can trade with the highest probability of winning. Okay, so what you have to understand then, after we've went over all this, is try to never short things as they're dropping. always look to short things when they go higher. Okay, so when people ask me, Alex, should I short the market today? My answer would be no. Okay, because you should have been shorting it here, you should have been shorting it here, and you should have been shorting it there. But if you're looking at me and you're saying, Alex, should I trade and should I short the market tomorrow? My answer to you would be yes and no. Let me explain. These S&P futures contracts are very expensive right now. They're completely overpriced, meaning that if you are not on the dot, if you are not spot on, you're going to have a hard time coming away with a large percent profit. Now, look, if you're scalping, maybe you're trading this resistance level, trying to get a couple point move, yeah, you'll make money just fine if it's a short-term trade, right? But on a Friday, with theta decay eating away at the pricing of your options, the value of your options, you got to get magnitude. You've got to get large size moves. And you're thinking, Alex, why is it so important that I get a large size move? If I get the direction right, if I buy puts and the S&P 500 drops, why does it matter? Why does the move have to be so big? Let's actually explain it right here. So you go to the option chain for the S&P 500 futures contracts right now. You can see the 4100 strike puts are going for $10.50, right? Bid $10.25, ask $11. So if these contracts cost you $10.50, what you are saying is that at a minimum, the S&P 500 is going to have to drop all the way to 4090 by the end of day just for you to break even on this trade. If it closes at 4093, you lose money completely if you hold these till expiration, okay? So you want to prepare for the worst case scenario, and that's how you do it. That being said, if you want a more in-depth video breaking down the options pricing, intrinsic value, extrinsic value, and so forth, just let me know down in the comment section below, but we're running out of time in this video. So what do you want to do? Ultimately, you want to keep an eye on this level here pre-market. So far it looks like we're staging a move higher, but that's not confirmed yet. So this is the time to sit out and be patient until you actually start to see more data, more time pass, and we actually get a better idea, right? So as a good trader, you have to know when to sit out and when to jump in. That being said, if the market is going to reverse back lower tomorrow, like it is more probable to do, what stocks do you want to be short of? Guys, what you really want to look for is these tech stocks that are overvalued right now. They continue to sell off, and this is also because of the rising interest rates. You can see here, the US 10-year actually had a down day today, just a little, of about 1.78%. Okay, but what you have is a bullish formation on the 10-year yield, and so when the yields rise, it's very negative for high growth stocks, and that's why you've seen stocks like Tesla fall off completely here recently. You've seen high growth like Roku fall off. You've seen high growth like Zillow fall off. Whereas Home Depot, on the other hand, right, not necessarily a high growth stock at all. And that's why it's been on a complete bullish rampage here within the last few months. Okay, so understand your sectors, understand your circumstances. When you have rising interest rates, you want to be short of these growth stocks, okay? That being said, these high growth stocks have been completely demolished recently, right? So getting back to that point, you can only land heads so many days in a row. So don't just think that, okay, go and short these high growth stocks tomorrow. They're guaranteed to drop, right, just because of rising interest rates, right? They can still bounce, but ultimately the trajectory is downwards for now. So stay in touch with this channel, guys. Make sure you subscribe so I can keep you up to date on these market transitions and rotations. For example, if they start rotating back into stocks like Tesla, I will be the first one to update you on that. Now, guys, in this video, I'm kind of giving you a general overview of some of these things and mistakes and errors that a lot of people are making. But in this video, right, we're running out of time. And I'm not actually going to be able to give my top trading ideas for tomorrow. But the good news is, guys, you can actually live trade the market tomorrow with me. You can actually get individual coaching where I tell you exactly when to enter and exit. Now, if you have any questions about the program or this video, guys, feel free to schedule a free 20-minute call with myself to talk one-on-one, or you can leave a comment down below and I will get back to you. Or you can also send an email to our email as well. Okay, so you got a ton of ways to reach out, guys. Please don't be shy. And that being said, that's all we've got for today. I hope this was helpful. If it was, please don't forget to drop a like on this video, guys. It really helps out. And make sure you subscribe with the bell on so you don't miss the next video, because the next video, I might be sharing some very valuable trading ideas that are going to help you tremendously if you're a trader, okay? So don't miss it, guys. My name is Alex. Thanks so much for watching. We will see you on the next video. Take care.